Alright, what is up, guys? This is the first episode or first video of the Rags to Riches playlist, and today we're going to be going over candlesticks. And it's the first video. If you guys are new to trading, that's perfectly fine. Alright, this whole playlist is targeted towards beginner and intermediate traders. Right, the idea is that you have no idea, about trading, candlesticks, nothing, right? You don't know a single thing about trading. Right here, we're going to tell you about everything, right? But one thing you need to have is common sense, right? You need to have some common sense, and using that common sense, you have to understand all the ideas, right? I can't just tell you guys every single little tiny detail step by step, right? You need to have some sort of kind of background information on all right, what a stock is, right? Just kind of have some common sense, some common knowledge, and you should be fine, right? You don't need to be an expert because I'm going to teach you everything, right? So some things that you might want to do are take notes, right? So you take physical notes. I feel like physical is the best, right? So just drawing diagrams on a notebook or notepad, right? Or you can go the digital route like Notion, use Google Docs, right? Just kind of have some form of note taking so you know what you're doing. And then after that, after you finish taking notes after the video, after every single video, I'll have something for you guys to practice. So yeah, I'll tell you how to practice, but for now, just kind of get something to take notes on. And then at the end, I'll tell you how to practice what we learned in this video. So with that, let's get started. All right, this is the first video. So we're going to talk about candlesticks, right? We know that there's bullish and bearish candlesticks, right? Bullish means price is going up. Bearish means price is going down. Okay, bullish candlesticks are the ones that are usually green, right? When you get your TradingView account, the default thing is that it'll be green and red candlesticks. Okay, green is when the price goes higher, and red is when the price goes lower. Right, what you have to understand is that a candlestick is simply the interaction between buyers and sellers in a specific time period. Right, so for example, on the 1 minute time frame, the 1 minute time frame has a bunch of candlesticks. Okay, each candlestick represents 1 minute. So let me show you guys a quick example here, right? So this is the 1 minute time frame, right? We have different time frames in trading, right? So there's a daily, 1 minute, 4 hour, all of these different time frames. Okay, simply they just represent just time periods, right? So this is a daily time frame. The daily means that this candle right here, the latest candle, represents 1 day, right? 4 hour, same thing. This candle here, ignore this, but just this candle, small little candle, represents 4 hours, right? The price action or the interaction between buyers and sellers in the period of 4 hours, right? Same thing with the 1 hour time frame, right? Every single candle represents 1 hour. So this is 1 hour, this is another hour, this is another hour. And if you look down over here at the times, you'll see that it updates, right? So every single hour, there's a new candle. So that basically applies to all the time frames, right? As a trader, you're going to be using a lot of different time frames, right? At least if you're trading the way I trade, you're going to be using a lot of different time frames. So what you want to do is just understand how candlesticks work, right? And if you understand how the candlestick works, you'll be able to use that concept throughout basically all the time frames, right? It's like a one and done sort of thing. You just learn it once, and then you can apply it to any time frame because candlesticks are fractal, right? Price is fractal, and time frames are fractal. So whatever you see on the higher time frames, you'll see on the lower time frame, right? If you see a pattern on the daily time frame, you'll see the same thing on the 1 minute, right? See something on the 1 minute, you'll see it on the 1 second, right? There's all sorts of time frames. Literally, you can pick any time, 17 seconds, 15 seconds, 1 minute, 1 month, 1 week, right? Bunch of time frames, right? And we're gonna get into what time frames to use and how to trade and all that good stuff later. But now we're just gonna focus on how the candlesticks actually work. Okay, so don't worry too much about the time frames. But one thing you have to remember is that every single candle represents whatever that time frame is. So every single candle here represents 1 minute. Okay, since this is the 1 minute time frame. Okay, and simply is just telling you the interaction between buyers and sellers. Right, what you have to understand is that buyers and sellers place orders. So I place an order. I'm like, okay, I want to buy 10 units of X. And then the seller wants to also sell 10 units of X. right? So for every buyer, there's a seller, right? So there's always a counterparty. Sometimes there's more people buying, sometimes there's more people selling. Okay, and this kind of goes back to supply and demand. Right, if there's a lot of demand, the price goes higher. So when the price goes higher, you'll see the candlesticks go up and up and up. And if you look at this sidebar over here, you see that price is going to go up and up and up when it's an uptrend and the candlesticks are going higher. Right, when it's a downtrend, candlesticks are printing lower, right, and the price goes down and down and down. Right, as I move my cursor, you see that the price goes down. Right, so it's like 30458, and over here it's like 30311. Right, so it's dropping in price and then increasing in price over here, dropping in price. Right, makes sense. So now we're going to talk about the actual candlesticks themselves, right? Because we understand basic trend, but now we need to think about, like, okay, what does the actual individual candlestick mean? So on a bullish candlestick, right, we have like two main parts of basically any candlestick, right? The first main part is a body, right? Body is just like that rectangular piece that you see. So this is the body, right? It's really easy to identify. This is a rectangle, okay? That's the body, and then we have the wicks. Right, we have two wicks on either side. We have one wick here, we have one wick here. Right, sometimes you actually see candles that don't have wicks, but I'd say like 90% of them actually have wicks. So just remember that every single candle has a wick. Some don't, but most do. Right, so you have the bodies, and then you have the wicks, okay? Body and wick for both bullish and bearish candles. So for a bullish candle, right, we open here. This is the opening price. Okay, and this is the closing price. So for a bullish candle, the open is lower and the close is higher. Or in other words, the price closes higher than the open. Right? This is like your distance, right? Just like the D distance, right? It's not a good drawing, but anyways, price basically goes higher here, right? Open and close simply mean that, like, on the 1 minute time frame, right? We're just going to use the 1 minute time frame as our example because that's what we're on, okay? So on the 1 minute time frame, price opens here, and then at the end of the 1 minute, or at the end of the 60 seconds, it closes here. So basically, the interaction between buyers and sellers, buyers win, right? Because the price goes higher for bullish candle, right? So in that 1 minute, price ends up closing higher, right? So that's a very straightforward concept to understand. Is that you're opening at some point, right? So like in the beginning or at the start of the minute, price is like whatever price it is, right? Whatever buyers and sellers agree that the price is at, that's what the price is. And then at the end of the minute, price is either going to go up or down, or it's going to stay the same. So in this case, it goes up and then it closes here, right? Closes doesn't mean like the market closes or anything like that. It just means the candle closes and then a new candle is going to start to print, right? So after the candle closes, a new candle is going to start forming, right? Wherever it might be, it's going to form, and then it's going to do, it's just going to print another candlestick, right? So I think we understand open and close, right? And then bearish candlestick is the same thing except the opposite, right? Bearish candlestick means the price is going down. So in that case, you guys can probably figure out what's going to happen to the bearish, right? It's going to open high over here. It's going to open here, and it's going to travel all the way down here, and then it's going to close here, right? Because there's a higher price, and then price goes lower, right? Because price is dropping, right? For whatever reason, the price is doing that, it's dropping, right? Because more people want to sell, there's more selling pressure, so the price closes here at the end of the minute, right? So opening here, and then at the end of the minute, it closes here, and then after that minute happens, a new candle forms, it does whatever, right? That's the main kind of idea. And you might be like, okay, I understand what the body is. I understand open, close, but what about the wicks? Well, that's a good question, right? For the wicks, you have your high and low wick, right? High and low wick are the same for bullish and bearish, right? This is a bullish candle, this is a bearish candle, okay? So the high and the low are basically like the extremes of price, okay? And the high and low is the same for both, right? The highest wick is called the high, the lowest wick is called the low for both bearish and bullish candles, okay? So yeah, let's get back to like explaining what the wick is. So the wick is simply showing you where buyers or sellers pushed price up at one point before closing, right? So what I mean by that is maybe it's like, let's say like the candle has opened, right? Like let's say like open somewhere in the middle, right? So it's like this, right? Whatever. And then, when it's 30 seconds, the price suddenly moves up, right? This can happen, right? Price moves up. It's 30 seconds, 31 seconds, 32, 35, 40, 50, 55, 57, 58, 59, 60. Okay, does that make sense? So basically, at one point, the wick represents the candle at one point, basically. So at one point in that 1 minute, right? So there's 60 seconds. So maybe when it was like 50 seconds, like the candle did this and it kept going up, right? It was high like this. But then towards the end, sellers were in control and they started selling off, and that caused the price to go down lower. Does that make sense, right? So there's some buying pressure here, and the sellers brought it down, right? Same thing here. There's some selling pressure here as well, and then the buyers brought it back up. So it's not always like a static thing, right? Candle doesn't just print, and that's it, right? It moves up and down, right? It moves up and down. So if you view like a live price action, you'll see that the candles print like crazy. Like they don't just print like this. You don't see it look like this on the thing, right? It goes up and down. Like it'll fluctuate. It might go here. It might go down a little bit. It might eventually go here, and then at the end of the minute, it does this, right? Same thing with the bottom one too, right? So even though this candle is a bullish candle and it closes higher than the open, it still fluctuates, right? It still fluctuates. This thing, at one point, this whole candle was a bearish candle, so it was like a red candle, right? This is like the first color that you see is that it's a red candle, right? But then it slowly does this, and it kind of like neutralizes, and then it does this, right? So the idea is that price is constantly fluctuating, and the open and close simply tell you like where price is at the start of the minute, and then where price is at the end of the minute, right? And then for bearish, it's the same thing, right? Price can do this, goes down, does this, go down, right? And you're mostly going to see this with the like smaller time frames, like 1 minute time frame, 5 minute, right? You're going to see it fluctuate. If you look at the daily time frame, you might not see it fluctuate because, like, actually you might, right? So what you guys can do is just go, just hop on the charts, right? Hop on TradingView. I'll like talk about TradingView later, but just hop on TradingView and just look at the price, like just look at the candlestick fluctuating, right? But anyways, now we understand the two main things, right? It's the body and the wicks, right? The open and close, open, close, open, close, and we understand low, high, right? Low, high. So these are the four main points of the candle, and then we also understand the bodies and the wicks, right? It's a pretty simple concept to understand once you get it. So now let's go to some chart examples and let's kind of see how this plays out in real life. Right, so this is just like a diagram that I made, right? And I actually don't have red and green because it's like a psychology thing. I'll explain why I don't have red and green later. But for now, you don't need to pay attention to the colors, right? All you need to do is just figure out, okay, is price going up or is it going down, right? If I take off the colors, if you see that the candles are going down, that means most likely bearish candles, right? Anyways, if it's pink, it's a bearish candle. If it's white, it's a bullish candle, right? So if we take this bearish candle right here, what can we see? The open is right here, right? The open is high. It opened higher and it closed lower, okay? And then we have this down wick and price came back up, right? So price basically did something like this. It went down and then it came back up like this, right? If that makes any sense at all. It went down and came back up. It's not the best thing, but not the best drawing, but that's basically what I did, right? Started here. So this is open, right? Just pay attention to this price right here, right? That's moving, like that black thing that's moving, right? So right here it's 30319, okay? 30319, and then it closes at 303000, right? So 30319, 303000, right? So that means there's like a $19 decrease right here. Price went lower by $19. right? And this works for any asset. So if you're doing crypto, forex, stocks, futures, whatever you're doing, it's the same analysis, right? Doesn't matter. Candlesticks are gonna look the same. The prices might be different, right? That's the only thing. But look, the price starts here and then drops down lower, right? That's the bearish candle. So open here and then close here. So the close is lower than the open, right? That's what determines if the candle is bearish or bullish. And for a bullish candle right here, look at this, right? The price opens here at 30312 and then it closes at 30334, right? So it makes sense. Price is going higher because of supply and demand. We see that price basically shows us that it's going higher, right? So price shows us that more people are willing to buy, right? One thing you have to understand is that price acts as a proxy for supply and demand, pretty much, right? Acts as a proxy for the buying and selling pressure. So when we see candles go up, that means that the buyers are in control compared to the sellers, right? When we see down close candles, that means the sellers are in control compared to the buyers, right? Because price is going down. So basically through price, we can understand what's going on in the marketplace, right? So we can understand the interaction between buyers and sellers and who's in control through these candlesticks printing, right? That's the main thing. So now, by understanding some of this, let's look at some specialty candles. So this candle right here is a doji candle, right? Doji candle means, the body is very small and the wicks are really big, right? The body size and the wick size can be anything, right? Sometimes, this is kind of like an average candle, right? This is your average candle. It's a big body and then two relatively smaller wicks, right? Same thing here, right? This one has a little smaller wick, right? These ones though, this one has a very small body and very big wicks. So this is called a doji candle. Usually if you see this, it means there's indecision in the market, right? Because basically what happens is that this candle right here, at one point, it opened right here, right? Then it used to be a full white candle. It used to be a bullish candle right here, okay? So it used to kind of look something like this candle, okay? But then, throughout the minute, it kind of fluctuated and then it went down as well. So it used to look like a bearish candle. It used to be pink, right? And then it eventually closed a little bit lower than the open, right? So the close is still lower than the open, right? So open is here and the close is here, right? So open is at 30314.5. And then, open is here, yeah, 30314.5. And the close is at 30314.0, right? So there's a 50-cent decrease, very small. But, it fluctuated a lot, but then at the end of the minute, it looks like this. So yeah, you guys learned pretty significant concept today about candles. So what you can do is just practice on TradingView, right? TradingView is completely free, so you can open an account for free, right? You don't need to pay a dime, and yeah, so just don't pay for anything on TradingView, right? Just get the free subscription. I think you just need to put your email in, and then you need to do a phone number and then your name. Right? I forgot how the sign-in process works, but it's really easy. And then go to Supercharts. Right? I can't really show it to you guys on here, but because I have the app version, but I have the desktop app. So yeah, it doesn't matter if you do it in your browser or if you have app. I feel like the app is a little better, but just start with whatever you want, whatever is easier for you. And just sign in, right? Just sign in, open any chart, right? I like doing NASDAQ because I trade futures. If you do options, you can do that. If you do, I don't even know how options work, to be honest. But, you can do any stock that you want. You can do Forex, crypto, whatever, right? Or if you want to just follow my trading strategy, just type in NQ, right? Just go to the futures tab and just type in NQ1 with an exclamation point, right? And just pick the first one, right? The symbol looks like this, and this is the title, E-mini NASDAQ 100 futures, right? But if you don't want to trade futures, then you do whatever you want, right? But the whole point is when you're doing your charting and stuff like that, don't switch assets, just pick one and stick with it, right? Because ideally, if you know what you're gonna trade, if you know what you want to trade, you can pick that asset. If you have no idea what to do, just do the NASDAQ. Okay, the NASDAQ futures is best, bro. Futures trading right now in 2026, I would say is the best way to go, right? For a lot of reasons. So I'd say, probably do that. But if you want to do something else, you can do that too. But the biggest thing is just to stick with one asset. Because if you can really understand how the market moves on that singular asset, you can just trade that thing, right? You're going to be an expert in like whatever you want to trade, right? For me, I only look at futures, right? I only look at NASDAQ. I also look at gold and silver, but mainly look at NASDAQ, right? So now I understand how the NASDAQ moves, right? Because like I get used to the price action. So it's really important to get used to that price. It's really important to actually get used to that price action, right? That's why I just pick one and do your analysis on that, right? And for your homework, just go on the charts and just kind of verbally kind of go through like, all right, this is the open, this is the close. Price at one point looked like this. It was like a bullish candle and then went down, and then sellers kind of had some buyers had some buying pressure, and they eventually closed the candle right here at this price level, right? Just do that, right? I'm just gonna do some more examples, like for example this one right here, right? Price opened over here at this level, and then it closed at this level, right? And the wick was here, price was here at one point, but then eventually closed here, right? And the order of like kind of where it goes in terms of the wick is kind of random, right? It just depends on who's in control, either buyers or sellers. So like, the higher wick can form first or the lower wick can form first, right? It just depends. It's just different all the time. For like, bullish and bearish candles, you can't really predict like which one's going to happen first. So yeah, but just kind of go through it, right? Just mark out open, high, low, close, right? So the opening price, the high, the low, and the close. For this one, the open, the high, the low, the close. Just mark that out, kind of understand what's going on, right? Maybe like find some examples of some doji candles for like indecision, right? We're going to talk about these a little bit more later on, but just kind of, identify them, right? Identification is the first step. Just identify that, like, all right, these things exist, and they mean that, they mean like they're like important. They indicate that there's a reversal happening or like a retracement, or like, there's like indecision in the market, and that a decision is going to take place soon, right? Understand dojis and just kind of practice understanding like, all right, bearish, bullish, bearish, bullish, open, high, low, close, and all that stuff, right? So just do that on the charts, right? Do probably like, 10, 20 examples. Just like do as many examples as you need to until you feel confident, right? It depends like from person to person. Some people need a few examples, some people need a little bit more. Just do as much as you think you need. And, if you need more, do more. If you think you're good, then you're good, right? And then move on to the next video. But don't binge watch the videos, right? What you don't want to do is watch one of these videos and just go to the next one, right? Just watch it completely through, take notes, practice it, understand how to do it, and then go to the next video, right? Because if you binge watch it, you're not going to understand the concepts. You actually have to apply the concepts. And it's not that hard either, right? So yeah, I think I've covered everything about candlesticks. And I probably missed something. So for those of you guys that are more advanced, if I did miss something, just let me know in the comments. And yeah, just let me know if there's something. I'll like, add it. I'll make another video. I'll add it onto this video. But yeah, that's it. Just make sure you guys do the stuff, get an account set up, and yeah, see you in the next video.